Good morning, everybody. Welcome to another Daily Market brought to you by Mike Bjork. Today is Friday, September 1st, heading into the long weekend here, Labor Day weekend. I hope you guys got some great, wonderful plans coming up ahead. Just want to give a quick shout out to my son. It's his 9th birthday today, so I want to wish him a happy 9th birthday today and wish him all the best. So we got a real big day today, and as we mentioned, we have the job numbers. So let's get right into it. So here's the first, the Bureau of Labor Statistics numbers for the non-farm payrolls for the month of August. Now, we had, back in previous reporting in July, we had 189,000 new jobs created. The forecast for August was supposed to be 170, and it came in at 156,000 for the month of August. Obviously a big disappointment, especially after good ADP number came in. We saw low numbers for people applying for unemployment. So today was actually kind of expected to exceed that. We'll touch on this a little bit more once we turn to the next screen here, but we'll touch more a little bit about the jobs numbers and what they kind of mean. So in a little bit, but let's just kind of get through this calendar here. We also got the unemployment rate. So we had a 4.3% unemployment rate. Forecast is supposed to remain the same, and it went up to 4.4%. Also got average hourly earnings for the month of August. So back in July, we had a 0.3% increase. August was supposed to go up 0.2%, and only went a measly 0.1%. We also got manufacturing numbers here. We'll start off with the market manufacturing PMI. So back in July, we had 53.3. Anything above, on these two next indexes, anything above 50 is considered expansion, anything below contracts. So 53.3 for the month of July, and it dipped in August to 52.8. Now, however, we got the ISM manufacturing index, and we had a 56.3 in July, and the forecast is supposed to increase a little bit to 56.8%, and it went up to 58.8. So we got a little bit better number for ISM, so a little bit of a mixed one there. We got construction spending for the month of July. So back in June, we had it dropped 1.4%. It was supposed to go up in July at 0.6%, and it dropped another 0.6% in July. So again, not so good of numbers there. And last but not least, we got the consumer sentiment. So we had a 97.6 last month, and the forecast is supposed to remain the same. And it came in at a 96.8 in the month of August, so it dipped a little bit here. So people weren't feeling as much as rosy as earlier in the year here. So let's go ahead and take a look here. Stock market is up. Why is that? Disappointing data here. You would think that typically the stock market would go with the flow and go worse, but it's actually up primarily because, as we talk about the jobs numbers, one of the concerns about the Fed is, one of the concerns that, not really concerns, but what they're looking at is the Fed. What is the Fed's actions? What are they going to be doing? They're going to be meeting up here later this month. Economic news has been sounding pretty good up until, obviously, these job numbers are a bit of a disappointment. The Fed's supposed to be talking about unwinding its balance sheet and also possibly another rate hike this year. As they said, they're going to do 3 this year, as they've already done 2. Now, they thought the economy is doing obviously better, but now they're thinking, well, maybe the economy is not doing as well as they initially thought. With that in mind, of course, based on the jobs numbers we just saw, we got a U6 number, which some people feel that is actually a more accurate type of a number. That remained unchanged for a U6 number for unemployment, was at 8.6. That continued over the same thing. Participation rate remained unchanged at 62.9% as well, or 62.8, I think it is, as well. On top of the jobs numbers that we saw there, July and June numbers were revised lower, 41,000. So we actually didn't have as much jobs as we thought in June and July. Those were revised lower by 41,000 jobs there. So with those in mind, they're thinking that the Fed probably won't be raising rates this year. That's what they're kind of what they're thinking right now. So based on that information, the Fed may not be raising interest rates. Stock market's kind of like the Dow's actually up over 22,000 first time in about 2 weeks as a result of that. So based on that information, that's what they're kind of looking for. Of course, when the September meeting comes up for the FOMC, they're going to be looking they're going to be looking for hints of the rate hike if there's going to be anything about that. But they're also going to be looking at when and how they're going to unwind their balance sheet. So that's going to be a big thing that's going to come up as well. So let's go ahead and take a look at the bond market, see what bonds doing. As you can see here, we're actually down for the day. We're down about 9 basis points currently from where we left off yesterday. So here's where we left off yesterday, and here's where we're currently at. There's about 9 basis points here. Now, we had some pretty wild swings here today. As you can see, we even touched this point here, which has been the ceiling of resistance here for us, and bounced right back down. We're even lower today as well. So we're getting some pretty wild swings there today. But right now we're currently down about 9 basis points. It'll be interesting to see how we end up for the day, especially heading into a long weekend. Now, heading into a long weekend, later on, probably closer we get to noon East Coast time, you can probably see it really slow down a bit, because you got a lot of the big hedge fund guys over there that makes these big swings in the markets. Will probably typically sneak off early to go to their Hamptons place, or wherever they're going to go, and heading into the long weekend a little early. So with that in mind, I would expect not much going on a little bit later on today, but we might get a lot of our movement early on, and then it'll probably just kind of stay there for the most part of the day here. So just be cognizant if you're watching the market and such. That's what most likely will happen here. But right now, we don't really have any change in pricing as of right now, as in terms of where we left off yesterday. So pricing's about the same as where we left off yesterday. All right, so that pretty much concludes it. But again, if you guys want to get more updates, just come over to Twitter. You can find me at Mike Bjork on Twitter, and you can get more updates over there. Otherwise, I hope you guys have a great long weekend here. Enjoy yourselves, be safe, and enjoy your families. And we'll look forward to see you guys on Tuesday. Have a great weekend. Bye-bye.